We want to welcome you to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, have a backup plan for 1031 exchange, so you can create and preserve more wealth. My name is Brett Swartz. I'm the founder of Capital Gains Tax Solutions, and each and every episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas and deal stories, so together we make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm so excited to be joined by two absolute rock stars, Mr. Garrett Sutton and Mr. Ted Sutton. And Garrett has been in practice for more than 30 years, and he assists entrepreneurs and real estate investors from around the world to protect their assets and maximize their financial goals through sound management and asset protection strategies. He's a highly sought after speaker and serves as a member of the elite group of Rich Dad Advisors for the best-selling author Robert Kiyosaki. And Mr. Ted Sutton, his son, is a licensed attorney, and he born and raised in Reno, Nevada, and he has a passion for helping people and serve entrepreneurs as it pertains to LLCs, setting those up, maintaining them, and doing all things to continue the legacy of his father. I imagine. Please welcome to the show with me, Mr. Ted Sutton and Mr. Garrett Sutton. Guys, how you doing?
Good.
Thanks for having us on.
Absolutely. And for our listeners getting to know you guys for the first time, maybe do like the 30 second version, Garrett, of the background as much as you can, because we can dive right into the topic at hand, which is building LLC asset protection plans, as well as the Corporate Transparency Act, which is happening right now that everyone needs to know about. So Garrett, go.
I became very fortunate to become associated with Robert Kiyosaki 23 years ago, and traveled the world with he and the Rich Dad Advisor team, and have written a number of books in the series. The most popular one is called Start Your Own Corporation. And it's just been really rewarding to help Robert's followers and people who are getting into business, investing in real estate, starting businesses. So it's just been really great. And now we have this new law, the Corporate Transparency Act, that no one's talking about. So we're glad to be able to be here with you, Brett, to let people know what's happening this year. So Ted, you go.
Yep. So as you know, I'm Garrett's son. I graduated college with a degree in mining engineering. But after spending a summer in Chile, it made me realize it wasn't for me. So, I took a different different career course. Decided to follow my dad's footsteps in the law, went to law school, passed 2 bar exams, and now I'm working with him, helping people set up LLCs and making sure that they comply with the new Corporate Transparency Act.
Absolutely amazing. I love it. And it's so important because there's not a ton of people who are actually really focused on what you guys are focused on and have done it at such a high level for such a long period of time. And that's really, really important whenever you're facing anything with wealth, especially these days, as it becomes more and more, it feels like the government taking us on versus being on our side, right? I think part of it is the spending problem, right? Which has to do with a lot of the changes. Okay, and so let's dive into that number one secret right now. As it pertains, first of all, to building LLCs for asset protection. And then we're going to tie in the Corporate Transparency Act and how this all fits in. So Garrett, why don't you kick us off? What would you say the number one secret is to building an LLC asset protection plan, or maybe it's the team that you're building around you?
Well, team is certainly important, Brett. I mean, you don't need to learn how to form LLCs or do taxes. You just need a good team. You need an attorney on your team. You need a CPA on your team. And it's important to know when you start, if you start out in your individual name, you do business as a sole proprietor, you buy real estate and take title to the property in your individual name, you're personally exposed for every claim, so that an attorney suing can reach all of your personal assets. That's the system. We're not going to change that system. But the system also allows us to set up LLCs and corporations right at the start, so we can protect ourselves. And that's what we do. We offer a free 15-minute consultation with a paralegal. We can talk to you about what you need, what it costs. But at the very start, you need to think about the asset protection, because the longer you operate as an individual, either in real estate or business, the longer you're exposed to a personal claim where they can reach all of your individual assets. So right at the start, we need to start thinking about asset protection.
Absolutely. And by the way, you can learn more about Ted and Garrett Sutton by going to corporatedirect.com to form LLCs, to get a plan, get a team going, and so that you can, know what and when to do things, which leads us into the next part of this topic, which is the Corporate Transparency Act. So maybe Ted, you want to kick this off? What is it? Why do we need to know about it? And give us some of the bullet points here.
Yeah, for sure. So the Corporate Transparency Act, as my dad has already mentioned, it's a new federal disclosure law that no one's talking about. So a lot of these federal regulations target big businesses. But what's unique about the Corporate Transparency Act is that it goes after the small businesses. If you have under 20 employees, if you have holding companies, things of that nature, you're going to have to comply with the new law. So the Corporate Transparency Act, it took effect on January 1st of 2024 this year, and it requires 30 million small businesses in this country to report information to the federal government. So when you have an LLC or a corporation, usually what you would have done is you just set it up with the Secretary of State. But what's interesting about this law is that it requires you to report information to the federal government on top of the state government. And there's a lot of personal information that you need to submit to them. You submit it to FinCEN, which stands for the Financial Crimes Enforcement Network. It's a branch of the U.S. Department of the Treasury. And the scary thing is that if you don't comply with this new law, you can face up to $10,000 in fines and or 2 years in jail. So the law definitely has some teeth with it. And unfortunately, there's a lot of small business owners out there who've been left in the dark about this new law. A lot of companies haven't reported their information. So it's really important that we're talking about it here, because the last thing that I want to happen is for innocent small business owners to get slapped with a penalty.
Yeah, so it really sounds, A, it's very serious, right? And B, it's happening. There's not a lot of awareness. This is why we're talking about it. And so went into effect 1/1/2024. It's requiring at the federal level for LLCs or different entities, so we can talk about which ones they are, to report who is the owner behind it, right? Who is the true owner, personal person, right? Not just entities. And as a way to all the different reasons, I don't know if it really matters at this point what the reasons are for why they want to do this, but if you don't comply, you're looking at fines of up to $10,000 probably per entity, I imagine, and up to 2 years of jail. Is that a fair summary, Garrett, or anything else to add to that?
No, you're absolutely right, Brett. If you don't comply with this, it can be 2 years in prison. Now, they're going to make examples of people at the start. They're going to be, some guy in Idaho in the hills that doesn't want to do anything with the federal government. They're going to go after those kind of people, but they're going to start making examples of people who willfully disobey the law, and that will get everybody else to file. There is a lot of misinformation out there right now. People are claiming that after the election, this law will be repealed. There is not enough time after the election to repeal this law. If you have an entity that was set up in 2023 or earlier, you have this entire year to get the information into the federal government. I would not wait until the end of the year. There's going to be a rush at the end of the year to file this information. So you need to do this now, or at the very latest by the fall, because this law is not going to be repealed anytime soon.
So let's dive into this, Ted. What entities apply? Maybe the frequently asked questions, right? So if it's a trust, of course, LLCs, we know that, S corps, C corps, or another way to put it is what entities don't apply. Like if you own something in your personal name, obviously you don't have to, say anything. But is it everything else that you basically need to report and create a FinCEN number and go online and submit everything? Well, what do you think, Ted?
Yeah, and that's a great question, Brett. So the definition of a reporting company, these are the companies that need to report information to FinCEN, it's an entity that's created by filing the document with the Secretary of State. So if you have an LLC, a corporation, a limited partnership, a business trust, or a statutory trust, those would count as reporting companies because they're entities that are created by filing a document with the Secretary of State. Now, entities that aren't created by filing a document with the Secretary of State are things like revocable and irrevocable trusts, general partnerships, sole proprietorships. So those don't count. And then on top of that, there's 23 reporting company exemptions. The most notable one's the large operating company. That's where you have more than 20 employees, $5 million in gross receipts in a year, and then also a physical location in the U.S. There's 22 others. I'm not gonna put you guys to sleep by going through them. Going through the regulations wasn't fun. There's 22 of them, but for the most part, if you don't meet one of the exemptions, you have an entity that's set up with the Secretary of State, most likely you're going to have to report that information to FinCEN.
Okay, so to keep it really simple here, right, and not to make it super complicated, it sounds like if you have, and probably 95% of our listeners, 98, they have an LLC, they have an S corp, they have a C corp, right, and they might have multiple partners. They might have a limited partnership, right? So for those people, what we're telling you is yes, and yes. All of you guys and all of your partners need to register with FinCEN and get this done. Is that I'm hearing that, Garrett? Is that what I'm hearing right? Or Ted?
You've got it exactly right, Brett. You've got a year. You've got until December to file this information with the federal government. They want to know who the major shareholders are, which people have control. So you may not be a shareholder or a member of an LLC, but if you're a manager or a corporate officer and you have control of that entity, your name needs to go in as well. Now, the other thing that we haven't mentioned yet is that they want the number of your driver's license or passport and an image of your driver's license or passport. So you've got to send in an image, a copy of your passport or driver's license for this database. And then if your driver's license expires in 2026, when you get that new driver's license, you have to amend the filing and send in a new copy of your driver's license. So although you don't have to file every year if things don't change, when you get a new driver's license or passport, you do have to amend the filing.
So this is an ongoing cluster of paperwork and bureaucracy that is put on the small business owner. Again, not a surprise. This is the stance that the government seems to be taking, and I'm sure they have all of the amazing reasons why it's going to be so good for everybody and for them and protection of people. But it's unfortunate. What about you said the manager? So like, what if I'm just a limited partner or I'm a minority owner? I have no real, no signing control. Are you saying that, again, just to clarify, that if you're just like a limited partner and you don't have any managing member or general partnership, then you don't have to submit for those entities?
Well, it would be 25%, right? If you were, go ahead.
Yeah, so the definition of a beneficial owner is anyone who either owns 25% or more of a company or exercises substantial control. So for the limited partnership specifically, if you're a limited partner who owns 25% or more, then in that case, you would count as a beneficial owner. And then for the substantial control side, if you're the general partner of that limited partnership, you would already have the substantial control. So, I mean, hypothetically, you could have a situation where you have 3 limited partners that have more than 25% and then a general with substantial control. And in that case, all 4 of those individuals would need to report their beneficial ownership information to FinCEN. So this is definitely going to cause a lot of nightmares for people, who have businesses with those types of structures.
But a lot of investors are in limited partnerships where they're a 5% owner. And by definition, they don't have control. They're limited partners. That situation would not call for a filing because they own less than 25% and they do not have substantial control over the activity.
Okay, so we're talking with Ted Sutton and Garrett Sutton. CorporateDirect.com is where you can find them. And this is a great example of why you need to build a team and build an LLC asset protection plan. You also need compliance for how to execute the exit plan for the Corporate Transparency Act. And all of those things fit together to help you and me and all of us do business as seamless as possible and as carefree as possible, without having the threat to go to jail for 2 years or $10,000 of fines. You need to have a team, corporatedirect.com. These are two amazing individuals who can help you with that. Okay, guys, let's shift a little bit. Maybe we can touch on series LLCs and or just maybe something that someone might not be thinking about when it comes to setting up LLCs to protect their assets.
I'm not a fan of the series LLC. They haven't really been tested in court. There are a number of states that don't allow for them. I think that you have clarity when you're forming separate LLCs. Instead of having the definition, the series LLCs, you form one, and then you have a number of assets in different buckets, and you don't need to form a separate LLC for each one. We don't have court cases on it. We don't have a lot of guidance on it. The state of California is consistent. They say if you set up a series LLC and have, 5 assets underneath it, you have to pay $600, $800 filing fees. So in California, you're better off setting up separate entities anyway because of those darn filing fees. But there was a case in Alabama where someone used a series LLC. The court was confused. They just didn't know how to handle this. And so until we have a nationwide law and a much better understanding of the series LLC, we don't set them up. You asked for something new, Brett. The state of Texas has improved their laws so that they protect the single member LLC with the charging order. So Texas is now considered a good state like Nevada, Wyoming, and Delaware. So that's a new development that's positive.
That's excellent. Ted, anything else to add to any of that or anything else that's new that would be helpful for the listeners?
Yeah. So, Dad covered the bases on the series LLCs. I actually did a YouTube video on why we don't recommend series LLCs. So if you head on over to YouTube, type in Corporate Direct on the address bar, you'll find our channel. Make sure to subscribe to it, by the way. And that video on series LLCs will be there. On top of that, Texas is taking the forefront, and it's not just because Elon Musk threatened to move, the state of incorporation from Delaware to Texas. They are establishing new business courts there to handle a lot of the complex litigation and business disputes that the Delaware Court of Chancery had, and I think just the economy that Texas has. In the next 5 to 10 years, we'll just see what happens. But I think that's one of the bigger developments is that, they're sort of taking off. And we already covered the Corporate Transparency Act, which is the big elephant.
And we're running out of time too, guys. I know you guys have the top of the hour, so I'm going to have these guys back because we just scratched the surface on some of this stuff as well. We didn't get a chance to touch on our favorite subject, which is capital gains tax deferral options and looking for ways to defer tax beyond just the 1031 exchange. I would love to pick your guys' brain on the deferred sales trust, on installment sales, on Delaware statutory trust, and just get a feel for what you guys see out there. It's always interesting to see attorneys on each side talk about this. Mm-hmm. So I would love to have you guys back for that. But in the meantime, guys, if people want to find you, could you mind one last time? What's the best place for them to find you?
Well, corporatedirect.com. And if you have questions about the Corporate Transparency Act, we'll set up a free 15-minute consult and tell you how we can help you get through that. We're doing all the filings for our clients now just to keep them protected. I'm not a big fan of this law, but it is the law and we need to follow it. So we're helping all our clients and your clients too, Brett, if they need the help to follow the Corporate Transparency Act.
Excellent. Ted, you want to add to that? You want to add a YouTube channel or something?
Yep. I already kind of did it. So head on over to YouTube, type in Corporate Direct. If you can subscribe to the channel, I'd really appreciate it. It's very unique because if you leave a comment on one of the videos about a certain topic, I'd be happy to get around to it. So It's really a good space where, people can learn about corporate law.
Awesome. Well, thank you, Ted. And thank you, Garrett, for being on the show. It's Ted Sutton, Garrett Sutton, attorneys at law out of the state of Nevada, corporatedirect.com. Also want to thank our listeners for listening to an episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Sometimes they struggle with clarifying what these corporate transparency acts and ways to build LLC asset protection plans and teams. I mean, there's a lot of complexity when it comes to building wealth. And that's why we want to bring in amazing guests like Ted and Garrett to give us clarity, give us confidence, and give us a plan to move forward. So either way, if you're looking to sell a highly appreciated asset, you're looking to set up an entity, you can contact Garrett or Ted, or contact me for Capital Gains Tax Solutions to talk about tax deferral options. Thank you so much for listening. Also, check out the book. I'll do a plug too. I got a YouTube channel, and we got a brand new book called Building a Capital Gains Tax Exit Plan. And hit #1 bestseller, which is cool on Amazon. And we have Kevin Harrington from Shark Tank in the book, pretty cool. And it talks about building a plan for you to exit with some freedom beyond just the traditional 1031 exchange. Check that out. Works for cryptocurrency, business sales. And as of today, Bitcoin's hit over 60,000 a coin. So you want to check out to make sure you have a plan in place so you don't get crushed by tax. Go to capitalgainstaxsolutions.com or check out the book, Building a Capital Gains Tax Exit Plan. Thank you, everybody.